Okay, I'm back. Jamie, I'm making you the presenter. Looking forward to hearing your voice and seeing your screen, my trading warrior brother.
All right. Let's see here. What, Dale, can you hear me?
Yeah, hear you loud and clear, my brother. How are you?
All right. I'm great. How are you, my man?
Good. You know, it's great to hear your voice, Jamie. How many interviews have we done in the past? About 3 or so?
Yeah, I think we've done 3. It's been a while since the last one, but yeah.
Yeah, really appreciate you taking time out of the day to come and share your views. I think you hesitated a little bit about doing it because, where's Dale at now? I know it's hard to keep track of me, isn't it?
Yeah. Yeah. I mean, everyone's busy, right? So just a lot. There's just a lot going on. But what? So wait, what? Real quick, which screen can you see right now? Do you see?
All right, we're looking at the pound.
Okay, so you got the 2 charts here, right?
You're right. We have them both up. So it looks like you're looking for this thing that it's not quite over, and viewing this as a 4.
Yeah. So let's start out with the daily chart, right? And real quick, I just saw a question with about that was answered. So daily effect, I'm actually no longer with Daily F.A.C.E at all as of a week ago.
And they were bought out by IG, right?
Yeah. So IG bought Daily F.A.C.E, and I am.
You let go of you're walking the high wire without a safety net now.
Yeah, that's right. Yeah.
But you've been doing that your whole career.
Yeah, it's kind of like my life basically. But yeah.
I just have to ask you before you go to the markets. I know you're in St. Louis.
Yeah.
Were you happy for us Cub fans last year when the Cubs won the World Series? Because I know you're probably a Cardinal fan.
A huge Cardinal fan, and the Cubs actually are in town now. They play a series over the weekend, Friday, Saturday, Sunday. So I was happy. I've got family in Chicago. You know.
Okay.
I got cousins. I got cousins, aunts, and uncles, and they're good. They're good people. So good peeps. So yeah, whatever. It's everyone everyone deserves the World Series every 108 years.
Yeah, and I think that makes up for us trading Lou Brock to the Cardinals for Ernie Broglio.
For Ernie Broglio, that's right.
That's a flash from the past, and so Jamie, your focus on the pound here, and I do want to get to it. I know I'm not sure if you're really paying attention or not to the S&Ps, but I kind of think that if the Cubs can win, that we'll go there. If the Cubs could win the World Series, that the stock market, it would be unusual that the stock market could have a 7 to 10% correction. But let's start with the pound.
Yeah, okay, so here's the pound. And we're going back to 2014 high here, right?
Right.
And we've come in, I think that we'll look at the weekly after this, but I do think we head up towards the 135 region. You can see how big a level it is on the weekly chart, but here near term, we've come into pretty big resistance, right?
Yeah, BRO. You also have a kind of a pitchfork there?
Well, yeah. So when you draw a pitchfork, and I know there are specific, ways that people, will use pitchforks. For me, it's just another method of identifying just the slope, the trend line, and so you can do it just by trend lines. But pitchforks are useful when you get a channel. So this would be your modified shift pitchfork, which is just a channel with extended parallels at every quartile, right? So 25%, 50%, 75%, 100%. And the pound in particular, this 25% line has really been at times extremely precise in its identification of support going back to 2015, and after that resistance, okay? You know, it screwed around into the Brexit deal, and obviously this happened outside of it. That doesn't, some people would just completely get rid of it, but it doesn't, for me, it doesn't like negate the whole thing here. So whatever, you know, the lower parallel was resistant, and then the median line was resistant. So bottom line, it's just, it's been very, the parallel's been very useful. And here we have resistance over the last, you know, 4 or 5 days. And there's also the gap up here too. A lot of people forget there was a gap from September at 29.76 or 75, depending on what data feed you're looking at. So there was a gap there too, and we stopped right there. We've pulled back, and now I'm looking at, so if I go into a 240-minute chart, we can look at where we might find support, because I think this is just a minor blip. I think that we're going higher.
So 775 to 27 might be a good area.
Yeah, and we might have just hit the low actually, like just now.
Okay.
If you can see this here, so here's a good example of using just slope analysis trend lines, right? Here's your trend line, and here's your parallel, which obviously was resistance beforehand, and we just hit it. So, you know, for me, that's good enough. Okay. And you know, if it wants to come in again, if it wants to try for this one at some point, then fine. But here's another thing that people don't realize or forget. This day here, which was 4/18, that was the day when I guess, what was it, May announced
early elections.
The early elections, right?
Yeah.
So that was a high volume day. It was one of the biggest volume days we'd had in cable in a long time. That day, I look at the high volume days are big as support levels, resistance levels for me. So that day, its close is 28.43. That should be support. Today's low is 47. You know, you get the idea.
Yeah, close enough for government work.
Yeah. Right. So to me, this is a big deal in as far as support. So, you know, obviously everyone's going to have the ways that, you know, the way they go about it. Some might buy just right into that level as a, you know, as a scalp or something. That's fine. You know, a really good setup.
It might be a nice little scale-in trade. You put a piece on here, and it keeps working lower. You know, maybe you have 2 or 3 entries. Yeah,
you know, and also, you know, it would be really solid if, you know, what's this here? This is a 3 down. You know. It'd be nice if you can get a triangle out of this, right? Maybe A, B, C, D, E, and then, you know, boom, right, for the next big move. So, you know, it's just something that I've got in the back of my mind that maybe you form a triangle around these parts. But
well, a triangle would be typical of a 4, wouldn't it? With the you know, final terminal thrust for 5.
Yeah, absolutely. And if we look at, I guess, price action from down here from the March low, you do have, you know, it would seem to be a 1, a 2, 1, 2, 3, 4, 5, and then this would fit as a 4, wouldn't it?
Yeah.
So yeah, it would be nice if we could develop a triangle. That would be kind of to me, that would be the really solid, high conviction, you know, play if you were to get something like that. In the meantime, I'm fine to, you know, look on the long side or buy in, scale in, or whatever, you know, as you noted, with allowing room if it wanted to come down into this level. Now here's another thing, and I know I was talking about this on Twitter actually not long ago, maybe like a week ago, with Nicola and Christian Kerr. And so you have this low down here, right? The crash low from October. And here's one of the issues with dealing with.
Which low is correct depending upon which platform.
Right. Like what is the low, right?
Yeah.
So if I bring, you know, if we could look at it, I've seen lows anywhere between the 16s to the, you know, 120, depending on the retail platform, right? In the interbank market, people are saying that you traded down at, they're all over the place. So for me, the real low is probably the January low, because that is the daily closing low on no matter how you look at it. And that's what I'm treating as the low. So in that sense, if I'm looking to draw a fork from down here, I'm probably going to use this, and it's probably going to have to be something like that, which I know you've already traded out of it, but that's actually okay, because if you were to trade out of it again, you would actually look for this line to provide support. Okay, so
and you go to your next pitchfork line, looks like up around 32 or so, 33.
Yeah, and so really it's just a trend line, and you're maybe looking at it like this. You have it off this high, didn't quite get here, but if you were to continue to consolidate down in this area, you'd have a confluence down here around 2750, which would be very nice, close to the former high, close to this reaction low. So basically I'm bullish, but I'm not sitting here saying that if it goes down, for another 100 pips, that it changes much as far as the, as far as still being constructive on this.
Okay, yeah, okay, we've got your take on cable here now.
Let's go to the weekly chart.
Thanks for providing that.
Weekly chart real quick. So
yeah,
here's what we will call the original trend line for the pound dollar, which is off the 72 high and the 1980 high. Okay, those, you can see the parallels off the 2001 high nailed the low so far. I think, again, this rally carrying into 134.70, 135 financial crisis low.
Yeah.
34.70, 38.2 of 3, so it's kind of beautiful. Yeah. And if we get that, 1, 2, 1, 2, 3, 3 of 3 is Brexit. Okay, 4, 5, up into 35, and then I think we could go to 110.
Okay.
And
so there's still another. So the dollar hasn't peaked. A lot of people are talking about the Dixie breaking channel lines and everything.
Well, yeah, we'll get into that. We'll get into that in a second. We'll get into that in a second. But here's why 110. The decline, you got to look at it on log scale when you're going back this big, and the decline from 07 to 2009 was 36%. 36% from the 2014 high gets you 110, just about. Okay, it's like 110.10 or something.
Okay.
Okay, the trend line, which is in here from the 1992 high to 1998 high, and you can see all the nice, beautiful touches there. Financial crisis low, lines up with 110 down here. A
lot of confluence.
A lot of good stuff. So I got this in my mind that on setups until 135, and then really reassess. And if things look right for a turn at that point, whenever it may be, take seasonal stuff into consideration. Obviously, seasonals tend to peak out for cable around the summer in July, so it'd be the best if we got there around then, and then get bearish
down into the end of the year.
Yeah, okay. I mean, maybe for a while, who knows? Yeah. But yeah, that's how I'm looking.
Great view, Jamie. And I really like that. I liked all the confluence coming in there at that low, and how you pointed out the 135 low, because that was a financial panic low. And for a couple of years, I've been showing how that low, unlike the euro, was a confirmed low. That the pound looked, since the financial crisis, all the pound did was really move sideways, while the euro had a looked like a bullish move, not an Elliottian, but they looked completely different. Why the pound was more bearish to me going into this year. So interesting.
The pound might be the really clear one as far as its wave structure and needing to make 5 down from 2014. As far as the dollar, and should we go to DXY?
Sure.
Just because it's the implications.
There's a debate going on. A lot of people think this was it, Dixie.
Yeah. Well, so I thought I thought early in the year, as we came into January, that we were going to get a top. I just didn't know what kind of a top. And the price action since then, I think, is kind of suggesting that it wasn't the top, and I'll get into that. But first, reasons why one might think it is the top. The pattern from the low, 1992 to here, and 2008 to here are pretty similar. In fact, this rally is 361 weeks from low to high in 92. This rally is 359 weeks from low to high. Okay, you topped on the first day, first week of the year. I mean, this was one of the most obvious times to turn bearish that I've ever seen the dollar. You had the economist cover coming out 2 weeks earlier right here, or 3 weeks earlier right here. There wasn't even people that fancy themselves as contrarians wouldn't be bearish the dollar, right? I mean, it was clear as day that there was some sort of a top going on. But here's the problem with that. So, or at least so far, is that the decline has been nothing short of
corrected. No impulsive move.
No, it's been, and I mean, I was turning bearish up. I was hoping for it to be impulsive. I would have loved it to be impulsive, but it just hasn't been impulsive. So it's tough for me to get, really, really bared up the dollar when we just don't have good action, suggesting that it's the right move. So if we go to, so here's what I'm thinking. I actually think we just topped for a little bit. You can see this trend line right here.
Down to 97.5 and then another advance.
Something like that. So like here's the, let's see here. So here's the update that I put in there last night.
Everyone, this is Jamie's service. Jamie has a timing service. Do you put out trade recommendations, entries, stops, targets?
Yeah.
Okay.
Yeah, so we don't, as of last night, we didn't have any entries, but like on the watch list is euro looking to go long at 108.28, pound looking to go long at 28.43,
Okay.
dollar looking pretty solid. It was all based on dollar looking to be short dollar on this, going into today, because we had this DXY chart, which we're looking for the top on this trend line right here. 99.85 was the bold level we were looking at, and you can see here what we get today. And go to the hourly chart, that top was right on it so far, and the top was 99.88. What was it? 99.89. So we're there, and I think we probably just topped for a couple weeks, maybe at least a week. And yeah, this is the thing. So the action's been slow as hell, right? In the dollar. And a lot of times when that happens, if you just get out of your, like what the hell's going on thought process, and just eventually it'll clear up. And I think it's cleared up now, as far as this would explain a lot about what's going on. If this is a C wave down, 1, 2, 3, 4, 5, this is all a diagonal in wave C. If that's indeed the correct interpretation, it makes a lot of sense, because diagonals are really corrective patterns, right? They're motive patterns. They're completing a sequence, but they're corrective. Their action's corrective, and they're frustrating because it's not impulsive and it's just not clear. Impulsive moves are clear. There's a lot of emotion. You can see the emotion. Corrective waves are the opposite, and it would make a lot of sense if this is the case. So this still counts as, a 1, 2, 3, 4, 5, 1, 2. Okay, then you get 3, and then this all counts as a 4. And it would, if you're going to make a low on the dollar, the next low, 97.67, I guess, is where the two equal legs come in. 57 is the wave 1 high. Closing high is right there. Obviously, you wouldn't want to see a whole lot of overlap if you were to get down here.
Yeah, Nick has a harmonic around that level. That's how I knew the number. So
yeah. So
you and Nick have confluence.
Well, that makes me feel good, actually. There. So,
I probably blushing.
I like that. I like that. So if we look at, hold on, what was it that we were looking at here? I had a deal that was, oh yeah, okay. So this is what it is too. All right. So I think we can all agree here that we've just come into a big level, like as of an hour ago or so. And I think the trades for the dollar are lower right now, but would be looking for a low at some point, down here, a week or two, whatever. There's another thing that's super interesting, and that is if I go to the DXY comparison, I wanted to do some overlay action here. All right.
Yen and dollar.
Okay, here it is. So what I was originally looking for, and this is one of the things, so like on our service, the site or whatever, on the long term, we have a long-term chart page, which kind of update over the weekend, and it's just, keeps the long-term stuff in perspective. But I'll put up the analogs that we're following, right? Like, so this is the dollar one. And so with the dollar one, I was thinking that you were going to come in. So I've seen this comparison people talked about, but some people are starting to give up on it now because they think that we should have already bottomed the dollar, which is a good thing. You want everyone to kind of give it up, right?
Right.
So if we compare starting with the 97 action, that actually does match up fairly well. You can see here that being matched up, right?
Yeah. And
this actually gives you, and the more I work with things like with these comparatives, the more I really, it's not necessarily the price, you're not going to match something up perfectly, obviously, because it just doesn't work like that.
No, it's more about pattern than price.
Yeah, it's more about shape, and it's more about like the big time, the big turn. So like, so when we line this up, say back here with the March 2015 high, there were times when it was really, they were very close. But as you moved along, one might have been, forgiven if they gave up on it, because it's just at times there was a big dislocation. But the destination of it, the big turns do tend to line up. So the next big turn would actually be over the next few weeks, calling for a low, right, over the next couple of weeks. So whether it's, the week that starts 5/15 or the week that starts 5/22, the idea is the same here as it was. So originally I was looking for a drop all the way down to the election low and a retest. That would seem to be pretty deep, and now realizing that you have all this relationship with the 97 stuff and the possibility of having the diagonal, more open to a low before the election low, before a retest. But that would be the idea. Now, this is truly frightening if you were to actually get a blow-off dollar like this, because I don't know what the hell that would mean for everything else. If you think about the grains and everything, I mean, they
should be deflationary, under 40 crude, everything, yeah?
I mean, yeah, it's really kind of scary. A guy who I talked to a lot, an old-timer guy, used to be on the knife back in New York a long time ago. I mean, he's like 50 years older than I am, and he calls moves like this, he calls them the stinger in the tail,
like a scorpion.
Yeah, like it's, everyone thought that the dollar top is in and we're good to go, and gold's bottomed, and crude's bottomed, and grains have bottomed, and then all of a sudden
they pull the rug out.
Yeah, you get like the world-ending move, right?
Yeah.
And so I'm open to that. I'm open to that. I don't know if it's going to happen, but I'm open to it. Yeah.
Would you mind giving us a quick look at what you're seeing in the yen? I'd be interested in that to possibly wrap it up. you know, people are, there's a lot of different debate going on here with the yen. I'm curious what you're seeing here.
Yeah. So I think
you have another fractal.
Yeah. So one of the things, and let me actually pull over a different chart here. Okay. So hold on. Okay, one of the things that I'm looking at as far as yen's concerned would be the, so back in, so I think dollar yen's going to like 150, maybe higher. One of the things we noticed, so the last time, so you had like a really extreme overbought RSI, right?
Yeah.
Back in at the 2015. It was the highest monthly this is a monthly chart, by the way, the highest monthly RSI you've ever had. And when you think about it, you know, or the way I look at momentum is you get a really strong RSI like that. It's a lot of, I look at it as like the beginning of a bigger move a lot of times.
Right.
And
because when you have, yeah, people say it's overbought. I look at it as confirming the move in a big way. You know, like markets rarely peak. They rarely peak with those kind of momentum readings. You could always 90% of the time look for another high.
Yeah, exactly.
Yeah.
And so and I'm looking at basically, you know, 5 down from end of Bretton Woods, and so it needs to be corrected with a big move up. And so looking at this is a big low, and then this is a monthly chart again, so it's really long term, but this trend line is a 60-month moving average, which is 5 years. And the last time you had just the opposite situation where you had a strong downtrending 5-year average and then you touched it after an extreme oversold, again, so think mirror image, extreme oversold, extreme overbought,
right,
pull back
to it.
low RSI 35, pull back, top RSI near 65. So this 1990 equals Brexit 2016. Okay.
Interesting.
So basically, I'm looking for this pullback that we just saw, which we obviously bottomed at 2 equal legs, and we could be like, you know, so this is actually that mirror image. Okay.
Yeah.
Plotted with it. So yeah, we could. I think, you know, on a trading basis, again, like I came in and I'm looking to short dollar yen, actually a little higher than where we topped out today. But
well, if this count is right, then the bond bears are finally going to be right, and yields should really spike to the upside if that correlation holds true. And you would think this would also be pretty negative for gold too. That could take gold under 1,000.
Yeah,
I mean, to 150.
Yeah, I don't know. I mean, I don't know. You know, like I'm open to.
Yeah, I mean, they could break down. These correlations could break down, but and it would say that the bull market in equities risk on, at least for the Nikkei, which is now outperforming our market. So.
Well, yeah. Like so, maybe. So, like, wouldn't it be something if you know, if you actually had, if you had dollar yen go a lot higher and the stock market in the U.S. went lower.
Yeah.
You know,
I think that could happen. That would throw a lot of people off.
And here's a chart of, here's the chart of, here's the Nikkei divided by the Dow. And it used to trade at 17, and now it's below 1. And like, you know, I mean, what if this is just a big bottoming pattern? You know, the Nikkei is going higher, mean dollar yen's going higher, and the Dow's actually not, going a lot higher. I mean, that's, it's possible, kind of open to whatever. So I like to look at all the charts on their own two legs, obviously. And
what a great presentation. You always come through, Jamie. I love your work. I love your work. Why don't you show your website again? Jamie has a service. I think Jamie's one of the best out there. And,
so this is this is our site, sbtradedesk.com. We've got so I write this, the swing updates every day. This is an example of one again last night. I've got these daily scans, which are explained obviously on the site. We've got kind of special reports linked to levels, pay attention to, watch list. Sometimes there's trades in there and sometimes there are not, but it just depends what's going on. And then there's the charts that are highlighted for the day, basically. And then Mike, my business partner, Mike Boutros, he does shorter term stuff, so he'll have, really short term levels to highlight. And then again, the long term page will have links to seasonality stuff on it, and just these are updated infrequently, but they are longer term in nature. So obviously that's the idea. They don't need to be updated.
I have a question. I'm interested in your thoughts, and it's more like a business question or a philosophy question.
Yeah.
What do you think about the fact that, you have a service, ForexAnalytix has a service, that we bring in guys like you that a lot of people would view as a competitor to edify our community, to give you visibility that people may decide to go to you, but we do this anyway. What do you think of that?
I think it's good business practice. I think it's good business practice to have the community, right, which we're really all a part of.
Right.
But
most will not do that because they're afraid they might lose a deal. Don't you think?
Yeah, I don't know. I mean, I guess it goes both ways. We went through.
It depends if you believe in abundance or scarcity.
Yeah.
Or if you put your community first, and that means bringing in different viewpoints at times for them to have a choice and selection as to what may serve them better, or as Jack Schwager said, and I'm going to be interviewing him June 5th, find a trading style that suits your personality. So I was just curious.
I think that's a good point, is the fact that everyone has to kind of make up their own mind on what they want to, how they want to trade, and everyone is going to have someone that is more, useful for them, right? Like I might be useful to somebody, really useful, and someone else I might be like terrible for them just because it doesn't work with how their brain works, right?
Right.
So, there's plenty of people that might try it and be like, well, this isn't for me. This guy's, he's off his rocker or whatever, and that's fine. I don't care. That's fine.
I'm a fan, Jamie, and I want to thank you for coming in and taking time to edify our community. Hope you have a great rest of the spring and summer, and hope we could get back together a little later on and see how some of these things worked out. And maybe when the pound's up around one,
Dale, I'm sorry to interrupt. Hi, Jamie. It's Steve. Because I see him looking at the same chart I actually had in front of me, the Nikkei. And before we let you go, and first of all, thanks a lot for being here. It was very interesting looking at your views. If you have one more minute to have a look, or at least give us your viewpoint having to do with U.S. stocks in the shorter term, I've counted a 5-wave up in Nasdaq, and in generally we see that probably we are up for a correction. What's your viewpoint on that?
Yeah,
A
so
lot of people have also asked here.
yeah, okay, so here is the where we got here. All right, let's see. Okay, so I'm going to start with a real quick. This is a quarterly chart, and if you take away, which is really hard to do, but if you take away all of your biases and just look at this as a channel, just of a price chart, and that's it. This is from the 1932 low, okay, and the 1929 high. Now, eventually, this is a bullish channel, and I think eventually the upper channel is going to get reached, and that's going to be above 100,000 in the Dow, okay? But before that can happen, you probably need to get a drop down towards, it might even be down towards the blue channel line, which is off of the low from 1942, and that's really when the depression ended back then. And it's also lows before you took off on the upside. So I'm going to zoom in on this to a weekly chart. Okay, that red line, which is off the 1937 high, touches a lot of important price points, including resistance and support before you got into the financial crisis. In fact, it was the last high before the financial crisis. So near-term gyrations notwithstanding, I don't think that you're going to get, I'm basically waiting for this to be touched before I'm like, you know, a bear. And that's 22,000 plus in the Dow. Now, yeah, in the near term, you could drop down here. You could drop down to 20,000. So, you know, at this juncture, am I concerning myself a whole lot with the near-term picture? Not necessarily, because I think it's corrective, and there's the problem with corrections is there's so many different possibilities in the correction, you know, that it's always impossible to kind of predict them. Like you could have a triangle, this could be a triangle, this could be a flat, this could be something complex that people have all kinds of names for, you know. So from here, the February high, it's probably something of a fourth, you know, if you count this as like a 1, 2, maybe 1, 2, 3, 4, 5. This would be a 4, and then you would be going, you know, 4 and then higher and 5. So if we draw it, let's see, 28 degrees and 28 degrees. So that would be where one would typically look for a low in the fourth, right? So that's kind of how I would, or that's how I'm going about it. Again, I'm trying to like not really trade indices as they're in these types of corrections, you know. But that's my idea. Basically, I want to be bearish when it gets to this red line. And that's how I'll look at it.
Thank you, Jamie.
Thank you very much.
No problem.
Thank you for the bonus, love. So,
Yeah.
Jamie, I hope the pips rain down on you the rest of the spring, rest of 2017, and good luck to you and your business, and you and your family, health, blessings, everything, buddy, and really appreciate you taking the time to hang out with us today and share your great work.
Yeah, Dale, thanks for having me. Loved it as always, and let's not be strangers for long. We'll do it again.
Okay, brother. Everybody, that's Jamie Saettele. You can follow him at Jamie Saettele on Twitter, and the name of your website one more time, Jamie.
Oh yeah, sbtradedesk.com.
sbtradedesk.com. Thank you, Jamie.
All right.
And
All right,
that's going to be. Go ahead, buddy.
Oh, I'll talk to you guys later. Take care.
All right. Thank you very much, everybody. Now you only have 2 days to get your pictures in of your trading station for the contest. And I have a surprise. I don't know if you heard me a little earlier. Jack Schwager, author of Market Wizards, I have him scheduled for June 5th. So write that down on your calendar. Enjoy the rest of your day. Don't just count your pips, count your blessings. Thank you, F.A.C.E members. Thank you, Steve. Thank you, Blake. Thank you, Nick. Thank you, Grega. Thank you, Stelios. And see everybody tomorrow. We'll wrap it up. You're very welcome, Hardy. You're welcome, Clayton, Luca, my trading warrior brothers and sisters. Take it easy.